I've got to go to, I couldn't do it as a diehard Red Sox fan. I'm not going to go long the Atlanta Braves, but this is textbook Gabelli. It was 20-something. Now it's on the edge of 40. Explain why the Atlanta Braves are going to win the Gabelli World Series this year.
I'm sorry about the Red Sox losing last night. The Braves are doing well. Independent of that, the pitch clock is having an impact on baseball by shortening it. We'll get the results over time. But in addition to that, you have other reasons for attendance. You have other reasons for revenues. There's about 62 million shares of BATRA and BATR, the lower voting stock. Our clients own a significant piece of the voting stock. And so as a result of that, we are obviously cheerleaders for the Atlanta Braves. And we think between Battery Park, that is the area in which the stadium is in,
right,
the value of the franchise, I think you're going to get, $45 to $55 a share somewhere in the next 12 months.
Right.
That's it. And if you don't want to own it because you got emotional dynamics such as life, that's your portfolio. But give it to everybody listening should get 100 shares for Mother's Day for someone that they like.
Mario Gabelli on the Atlanta Braves putting me in the Gabelli It'll Double timeout chair as well. There will be reports on Disney, Mario. I think of you and Gordon Crawford at Capital Guardian Trust as being people that have followed this entertainment idiocy. Were you surprised at the streaming nonprofit and is Disney the mother of all Gabelli values?
Well, you've got to look at the amount of money being spent on content by the companies. As an example, Disney will probably be 28 to 30 billion. Netflix is trying hard to get up to 13 or 14 or 15 billion. Paramount's higher than that. Then you have Apple trying to catch up. But Apple cumulatively, maybe for the last 5 years, has spent 13 billion. So they don't have any content. So where and how do you find, I Love Lucy and I Love Tom Keene and I Love Lisa? Those kind of contents are buried in there and they come back. And for example, A Beautiful Life with Jimmy Stewart, because of the bank run, people are going back and looking at that. So how important is the embedded value? When you do a theatrical box office, you had a $42 billion business. But the theater operators get 40% of that or higher. So now you go direct to streaming, and unfortunately, because of the regulatory organizations, the companies like AT&T and Verizon and T-Mobile don't get paid for people using the highways on a super speed. I go over to George Washington Bridge, and I pay less than a Class 8 truck.
Yeah.
So, Tom, from Disney's point of view, yes, you got a learning curve. You've got some dynamic short term. You want to go global. We can't be so. The U.S. has only got 350 million people.
Right.
The rest of the world has 7 billion more.
Right.
Plus.
Mario, are you still enthusiastic about Paramount? Do you still think that Apple's going to buy them?
My own reaction is that whatever. You have Bob Barkley doing a great job running the business. You have good content. They're obviously making the tough decisions to give them financial flexibility. The Federal Trade Commission turned down an ability for them to monetize Simon & Schuster, what they're going to do. They're going to do BET. They're going to try to raise some capital there. But, from my point of view, a year or two from now, they have to sell or spin, which they've done before. They're very good. For example, nobody applauded them when they bought Pluto for as New Yorkers would say, bupkis, and they basically have done a great job on that. Now, independent of that, without getting into too much detail, they were spending $600 million a year on cash dividends. That's going to be down to, 20 cents times 650, a significant amount less. So over the next couple of years, put the foundations back in place, accelerate the growth, and execute. And that's what they're going to do. And then you ask the simple question.
Yeah.
If you got a stock selling at 30, which is now 19, let's call it 30, and you basically multiply that by 650 million shares, you're talking about a $20-odd billion equity value, and then you got debt will probably be down to $8 billion if they do the sale of these assets and keep the cash flow. So you're talking about a tiny little morsel. So if Sherry, who owns 30 of the 40 million voting shares, decides that, Apple wants to pay me X dollars, and it's de minimis for them, and they don't have the broadcast stations anymore because they're spun out and they're in the process of spinning. You know, lovemaking takes place in a variety of ways.
So, Mario, on a broader level, you did just get back from Omaha, where you were at the Berkshire Hathaway annual meeting, shareholder meeting. Have you ever heard Warren Buffett this negative, this gloomy, this pessimistic on stock? Did you take a message from that you also
I disagree with you completely. Warren Buffett basically pounded away at the idea that if you believe in the virtues of the American system that allowed him for 80 years, when he first started investing at the age of 13, to make a lot of money, that tailwind continues to flourish. So is he practical? Yeah. I mean, you know, he's very patient. And so as a result of that, he's got his cash. He's waiting for it. All of us are going to focus on a 13F that's coming out by Monday and see what he bought, what he sold.
Right.
You know, so what? You know, he's got smart people working for him. And he first announced Greg Abel now taking over, and Ajit Jain continue to run the insurance business. So
Mario,
the management succession has been identified.
Everyone wants to know the value trap that's the banks. In your research note, you say to me that you want to buy a Southern bank for acquisition. My theme for the year is the great zombie roll-up. Are the smaller banks one collective zombie, and are we going to see a massive bank roll-up led by banks in the South?
You know, look, you got all of the right dynamics. We have a lot of banks, but, you know, let's flash back. You and I have been doing this for a few years. You had a crisis in 1967, 8, 9, where the banks lent money to oil tankers or whatever they were. In the 70s, you had the Herstatt Bank, you had a whole bunch kind of go bust. You had a whole, in the 80s, you started 1,000 banks, Tom, went bust in the Savings and Loan Association crisis. Because of that, the accountants put in a rule called hold to maturity, don't amortize, and then you had no interest rates for an extended period of time. So somebody says, I got a deposit, I'm going to lend it long, it costs me no money. The basic bank problem is you borrow short and lend long, you got a problem. Independent of that, you still need to have that service for the American public, the American economy, and we'll get over this notion of how bad the office markets are. That's it.
Mario, we got one Yankees fan. He's down in Florida, and this Yankees fan emails in and says, the breadth of the market is important. Broad-based rallies have the potential to continue, while narrowing rallies are prone to failure, quoting the great Bob Farrell of Merrill Lynch years ago. Have you ever seen anything as narrow as what we see with Apple Computer and 4 other stocks, and what do we do about it?
Well, you got a lot of dynamics. If I was growing up, Tom, playing World of Warcraft, and I'm now playing Diablo 4 on my machines, I am very quick. I learn. I want instant results. I want to play momentum. Clearly, you know, and then I get on Robinhood, and then you get quants, Momo, algos, and AI all coming together to do trading. The markets are the markets, okay? The values are the values. Over the next, right now, for example, even if GDP is down 2% real, and inflation's 5%, you're going to get nominal revenues growing at 3%. And that's a large basket for what you talked about before on your show. Of companies having gross margins, SG&A, they're learning how to deal manufacturing, reshoring to the United States. Kaizen is out. That is the just-in-time inventory. Now you bring it closer, and you get more efficient, and you do AI, and you start doing a lot of automation, and you pray for immigration, because that's where the long-term growth of this country is coming from.
Mario, we've talked about how we are seeing an increasing number of people go back to stock picking from just simply indexing. Do you notice that in the day-to-day? Do you notice more people interested in the trade that you've always practiced and you continue doing so?
No, but go back one giant step. I come from a culture where we had Graham Dodd, Roger Murray, Bruce Greenwald, and now Talos Santos teaching value investing. How do you do research? What is the value of an enterprise? Who is going to buy it? What would private equity pay? What is the capital structure that they can tolerate? What is the tax structure? How good is it? And then you cut through all the crap.
Right.
How good is the business? How good is the management?
Right.
And the values that you're buying them at, are they well below what you think the intrinsic value is? And therefore, that discount, you know, will go up and down. Over time, you're going to do okay. I think that the market Tom, in 45 years will be 1 million on the Dow. So, that's 7-8% returns.
Mario, you're showing your cards here. You're showing your Morningside Heights cards here. And the bottom line is Columbia Business School, and you mentioned grab, dot, and coddle, and a guy named Buffett went there years ago as well. Do the young Turks of Columbia Business School believe in the traditional Warren Buffett securities analysis?
There's a lot of cultures that come in quotes, in the financial area. You want to integrate analytics. Tom, if you and I were around 200 years ago, what we would be talking about today on this show was that the Rothschilds got a pigeon to tell them who won the battle at Waterloo, and that they went down and did something on the stock market. We can talk about that another time. Then you used to have Warren Buffett go down in Washington, D.C. to microfiche data, or Graham. I did it at the New York Stock Exchange. Today, I gave a speech and I said, Chat GPT. I got my grandson to do it, and it was a brilliant speech. And it took him 5 seconds.
Yeah.
So the question is, how quickly can we gather data? How quickly can we use it? But then when you got to be some practical judgment has to go in the mix.
Mario, one more question. Speak to the people out there that want to be in the market, but they're scared stiff. How do you play? How do you participate?
Well, first of all, you got to do what Buffett says, which is patience, long term. Don't worry about the short term dynamics. If I own a farm out in Iowa or in the Bronx, I farm in the Bronx, I'm not going to wake up every day and figure out what the prices are. I'm going to look at it and say, what are my cash flows, or what are my predictability, and what can I harvest it? Same thing with good businesses. If you buy a good bunch of business, and whether I have like the Tegna, Taxtron, Trayton, Televisa, my T's, we can talk about these things. The stocks will go down, they'll go up, but 5 years from now, I'm going to make a 10, 12% CAGRs.